Hello, everyone, and welcome to ICM's midday session. We had a couple of economic indicators that came out from the United Kingdom earlier this morning. Among them, the GDP, the monthly GDP reading, showing that the economy grew by 0.4%, which is a good reading, similar to what is expected. However, we're starting to see a slow economic growth, which could be a signal that there should be more to be done in order to support a better economic recovery. Also, we had industrial production, which expanded 1.3%, and manufacturing production also, which expanded by 1.7%. These were on upbeat readings. Uh, this is in terms of economic indicators. And while we're waiting for the European Central Bank monetary policy meeting, the decision will be coming out ahead of the press conference. There is no expectation for any change in interest rates. However, following the comments of Christine Lagarde in the last meeting, she stated that they would be calibrating the policy, meaning that they could be introducing or expanding or extending the purchasing programs. So this is what the market is waiting for in order to regain some traction, especially among slowing economic indicators coming out from the eurozone. So this should force central bank to do further action. Even the inflation is just alarming. We're seeing negative inflation for a while now. So also this could be another reason for the central bank to do more on the policy. Also, we have from the United States the consumer price index, which should be also monitored closely following the rise in average hourly earnings shown in the jobs report. So we have to monitor the CPI carefully. If inflation rises quickly in the United States, this could also weigh on the prospects of keeping monetary policy as is from the Federal Reserve. So this is one of the numbers that you should be watching out for, along with the initial jobless claims, the weekly claims that come out also on Thursday. We start with the euro dollar for the technicals. We were highlighting this triangle yesterday, and then we had the breakout to the low of almost 2060, and then the market is rebounding a little bit. On the bigger picture, we're just trading inside the same range between 120.40 almost 121.80, awaiting the ECB decision. The British pound against also, you can note that following this break, you can just use a trend line combining the previous tops and the bottoms, and you can see that the bottom was exactly this channel. So we had a triangle. The breakout of this triangle took us to the bottom of the channel, 1 2 3 4 and then 5, and then we got the rebound from this channel. The British pound against the US dollar, it's faltering on the day among lower chances of reaching any deal. We had this trend line yesterday, which was broken earlier today, and the market is falling again towards 132.85 area, 133.10, which was previously key support and resistance area. This area here is very critical for the British pound. If we continue to weaken, if it continues to weaken further, we could be retesting 32.30 again, 32.20, and even falling lower as we get further bearishness from Brexit headlines. So this could be the extended target of 131.05. The dollar against the Japanese yen, yesterday we were highlighting this resistance area here, the interim resistance. Then we had a clear breakout above it, but still on the bigger picture, we're still trading inside the same range, 103.65, 104.70. This is the bigger range that we're trading in. Any breakup above this, the upper limit could drive us higher towards 105.30, while a reversal and drop could just lead to drop lower or move lower towards 103.15. You can also draw here the trend line combining these stops. You can also draw the parallel line, which could give you some possibility where the market could be finding some resistance. We're almost close to this level. The dollar against the Swiss franc. So yesterday we were highlighting this level and this formation. We joined the tops and bottoms using trend lines. So you can see here we had a breakup of the trend line, touching the 100-hour exponential moving average, then moving back to the trend line again and trading between the trend line and the moving average. So on the bigger picture, we're just trading inside the range between the 100-hour exponential moving average and the lowest bottom. Any dollar strength could just drive us higher towards the 200-hour exponential moving average, which currently sits near the previous top of 89.45, making it a bit of a possible target if we witness a move to the upside, while further drop, a move back below this falling trend line just drive prices lower towards almost 88.50. The Australian dollar against the United States dollar on the bigger picture, which is we're still trading inside this channel, so you can just draw the channel that we are currently trading at. No change in view for the Australian dollar. We're just going for a higher high. We had the correction towards the 100-hour exponential moving average, and now we're moving higher towards the 75 target. The New Zealand dollar against the United States dollar, as I mentioned yesterday, we had two ranges inside the bigger range. So we had the range between 70 and 70.60 and 70.60 to 71. On a break below 70.60, the previous the interim top or the lower high, we will be trading sideways inside the lower range between 70 and 70.60. So on the bigger picture, you can just remove this line here and just look forward for continued consolidation inside this zone until we have fresh drivers. The US dollar against the Canadian dollar, following the bank policy keeping interest rates unchanged. So we highlighted this consolidation zone and we're still trading inside it. We found resistance near the 100-hour exponential moving average, but still on the bigger picture, we're still trading in the same direction. Any break back below the support could just drive prices lower towards 27.20 as the first support and 26.50 as the second target, while a break above the interim resistance zone 28.25 to 28.45 could just drive the prices higher towards 128.80. Gold prices, we were drawing this channel, and on the break of the channel we had a sharp move lower towards the previous support area. So you can just draw here a box which shows the support here. Previously we had support and then a bit of resistance and then support two times. We had a pullback from this area here between 1820 1825, so watch out for another dip lower. A break below 1825 could just drive us lower towards 1800 ahead of another dip back below 1800 towards 1789. So these could be the levels on the downside, while a break back above 1848 could just turn bullish again for gold and we could be rallying above 1860 again. Silver prices, also we highlighted the trend line. We had a reversal from the trend line. We drew the support line near the previous bottoms, and this is where the market was heading, 2350, and then we had the rebound. We're trading sideways, so this is the range that we could be trading in for a while until we have key drivers. A break back below 2350 could drive us lower towards 2280, 2260, while as long as 2350 holds, we're just poised to break above the downtrend line. For WTI, we're still trading inside the same range. See, the lines are still the same. We highlighted yesterday this trend line, this support zone, the previous the bottom on the day, 45.20. Despite the strong buildup in US inventories, we dropped towards almost the same support zone and then bounced back. We're still trading inside the same range. However, we're starting seeing some solid action which could drive prices above 46.75. So in order to just set some targets, you can just draw a trend line combining these two tops. We could be heading higher towards 47.10, 47.15 ahead of any rally. Also, if you're just expecting a further upside, you can just go for trend line combining the bottoms, raise the parallel line to the top, and then you can just get another possible target near 47.70. So this is for oil. Moving to Dow Jones. So yesterday we were talking about this trend line combining the previous tops, and we talked if the market about the 30,090 was a key level, and the drop below it could just drive prices towards the trend line. And this is what eventually happened. The market faltered on headlines of stalling stimulus stocks, and this what we had here, a reversal from the top, dropping exactly towards the trend line combining the previous bottoms, and now we're just trading sideways for a while. So any bearishness or any further negative headlines regarding coronavirus or the stimulus could just be enough to drive the prices lower again. So watch out for any break for the Dow Jones. If we go for a lower low for Dow Jones, this could just be catastrophic again and then drop towards 29,700. So we'll have a free fall there. However, as long as this trend line is holding, we could be poised to retesting the previous top of 30,320. This is all for the analysis. I would like to remind you that the information, news, analysis, and opinions, they are only for educational purposes and shouldn't be taken as signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. This is all. We wish you safe trading. Just take care when trading with the ECB, since we expect some volatility. on indices and currencies. So watch out and stick to your risk management rules. Thank you all for joining and have safe trading.